And then this is another trade that I took. This trade was on QQQ using the 3-minute chart. Just like the previous trade example, this is a long setup from a support level, a key support level. In the morning, price opened up above 346 or no 386 and formed a high at 387.65. So this is the high right here, right? And then before selling down to 386 where I decided to take long. So it sold down to 386 right here, and then I went long because we never got below 386 despite the super strong selling. We opened up here, we got a high, right? And some people might have went in and be like, "Oh wow, this is moving up." Because if you were to pay attention to these first three candles, right? I'm gonna zoom in. And it's gonna be blurry, but whatever. Like this looks like these are all bullish looking candles. This is a bullish looking candle, and this is a bullish looking candle, and this is a bullish looking candle, especially compared to this first opening candle. Because look, this is a hammer candle, right? But then we get this huge fucking wide body candle that invalidates all of that, and then creates a high up here. So it creates that high, and then look, now we have a lower high, and then right here, yes, I mean, you could say this is a lower high, but because I identified the support level, I say, all right, this is an area where I expect demand to be. This is an area where I expect buyers to come in that I could potentially take a trade to go long. And then, you know, we come down, we have the super, super strong wide body candle. We touch we touch 386, but we don't go below. And then this next candle is a green candle. We start seeing some buying, right? Even if it's not necessarily a bullish or bearish candle, it just indicates that there was some buying there. And then on top of that, look at the volume of this red wide body candle in comparison to the volume on this green candle, right? Look how high the volume is on this green candle, and it's higher than this huge red wide body candle. Because the volume is so freaking high, that's another indication that buyers are coming in because it's at this demand area of 386, this support level of 386. We have super high volume comparison to the previous candles before, and it's a green candle at this area of demand. Those are all different, confirmations that indicate, there's people building positions in this area to take it up higher. And then for the next subsequent, 3, 6, 9, 12 minutes, we're just getting dojis. We're just getting dojis and dojis and dojis. So I don't necessarily know that this is going to break and this if it's just forming a higher low, or if sentiment is changing and not a higher low. I don't know if it's making a lower low and then we're just gonna break down below 386 and it's just not ready to do it yet, or if sentiment is changing and we're gonna go up higher, right? But I'm seeing signs that it is gonna go higher because we have the volume here and then we have dojis here supporting this area of demand, meaning that people are still buying. People are buying and defending that level down there. And I took that as a sign, you know what? I'm gonna go long at this area just because I see positions being built. And then we kept going higher. We kept making higher lows. So I mean, yeah, kept making higher lows. That's a higher low right there. And we got this high. We did get a pullback, right? But that's normal in structure. That's another higher low. And then look at this red candle right here again, right? Um, Kind of a hammer candle, kind of a doji candle, whatever. But that's another higher low. It was still a pullback, but it's another higher low, and then we get another green candle, and then another green wide body candle before we reach the high a day where it sold off previously, right? So we sold off at this area. There's no reason for me to try to say, okay, look, we have all the structure up down here. It's gonna keep going higher. Nah, I'm just gonna protect my profit because I know that at this area there was a super strong reaction of supply and sellers. So if we get up here again, that's where I'm gonna get out. And I held this trade the whole time because I entered down here like really close to 386. See, according with this arrow, right? I'm not gonna get out the trade unless we get below this area, because that's when my analysis invalidated. Even though we had this pullback right here, I entered down here. So I'm still up on the trade. The trade is still higher than where I entered because I entered down here. So this is, and based off of the structure that is forming, that's a higher low. It still supports my thesis, my analysis. So I stayed in the trade. And then up here, this is an area where I'm gonna I might be presented with information based off of historical data, based off of this data in the past, that sellers are probably gonna be at this area. So I just got out the trade, and I could have been wrong. It could have been kept going up, and that has happened. That will happen. But in this case, I was 100% right because sellers did come in. Like we made another higher low right here, but you can see that like we're struggling. We're starting to make lower highs and higher lows, and that's just more. And then we're getting dojis. We're getting all different kinds of things. Kind of more sideways movement, not really upwards movement or downwards, not really directional. That shows, all right, right here sentiment is changing, and then we change that structure, right? So we have all of these higher lows. All right, let me do it like this. All of these higher lows, higher lows, higher lows, and then look at that. We break that structure, and now it's making just lower lows, lower lows, lower lows, and not really even making any highs, no pullbacks. And then boom, right here, this is a lower high now. So that's bearish structure. And this is on the 3-minute chart, right? I taught you in the course I taught you market structure, and that was on a weekly chart. So these concepts apply on any time frame. Any time frame whatsoever, and that's how I want you to be looking at the market. I want you to look at it based off of the structure, look at it based off of the candles and the information that it presents you, and the supply and demand meanings and the interpretations based off of all of these different things. And look, right, 386, right, this is the support level that I entered. We came down with after all of that bullish stuff, off of that bearish right here, and look at this, we got a hammer candle and then a green wide body candle, right? So say we didn't see the rest of these candles yet, like that they didn't happen. If I entered right here at 386 again, after seeing this hammer candle, that buyers were still present at the moment. Buyers were still there, and you can see that's why price went up. But because of the fact that there was so many sellers and market structure had changed, this created a higher low instead of continuing to go up, despite there being, bullish area or bullish demand right here. And then we created that higher low, validating the structure of it now being a bearish structure. And then we broke down below. We broke down below 386, which means that supply overwhelmed the demand down here. And even like you can see there, after we got down, people were still trying to buy. Prices was still coming up and trading around. So there was still demand, but because supply was so strong, it kept going lower. It's still bearish structure because like this is that area of consolidation now, that sideways market structure, because we broke down, formed new structure, and then we're just kind of trading because things are kind of balanced. Bulls are still there. There's still demand, but there's still way more sellers now because they're just overwhelming. And then, they end up winning pretty much, and price goes lower until we meet demand again, and then price comes back up. And that's it. That's how you wanna be looking at the market. That's how you would break down a trade and actually start doing analysis and making trades in the moment. And then there's so many different ways you could capitalize off of this, right? So say you see these higher lows, higher lows, higher lows, and then we break that structure. We break out below that structure. So supply overwhelms that demand. You could enter, say, right here because that structure has changed and now we made a lower low or a lower high. Or like based off of that previous structure right here, off of this demand, you could have gotten again right here. You wouldn't have profited as much, don't get me wrong, But this is enough to profit right here. That little move is enough to profit. You know, um, or like once we broke this structure and this show, we had that shift of supply and demand. You could have maybe entered somewhere along this area and went short. Or like, okay, you notice that things are kind of moving sideways right now, right? And then based off of this structure right here, of this sideways consolidation structure, and then the fact that this structure over here was bearish, and or it was bullish and then became bearish, right? If you combine those two concepts together and that context and the structure, you would have said, oh, or I mean, you could have interpreted and been, all right, the most favorable area for me to get in on consolidation, if I want to go short, is at the top. So you could have entered right here, and based off of whatever happened in the past, things are kind of more bearish right now. So I'm actually going to take a short trade. So instead of taking it down here based off of this little area of consolidation where there's likely to be more demand, you take it up here where there's likely to be more supply and more sellers. Again, going over where things are favorable. I don't know why I'm trying to write that. But going over where things are more favorable, that's how you would make that decision to say, okay, and then boom, you would profit off of that trade right there. And then you would use things like volume and all of those different other pieces of information to aid you in that. And that's what trading is, making decisions based off of this chart. And that's it. All I have are just lines and volume. I don't use anything else. And I mean, that's it. Like that's how you would take the trade. And then now, I also talked about the contract, right? So entering with an options contract. Once we got near 386, the price was never able to close below it. For multiple doji candles above it, indicating to me a change in sentiment and buyers stepping up to the plate and creating demand. I entered as close as I could to the level, so that way, if it did end up going below it, I would have no problem cutting my loss because my trade idea would be invalid. I already talked about that. When I chose my option for this trade, I chose a weekly option contract because I know this was going to be a day trade. I wasn't going to hold this for multiple days. For my strike price, I chose 387. I chose 387 because the high of the area where I expected sellers to come back in was 387 point what, like 84 something like that. 387.65. And so I bought an out of the money of the contract at the time because I bought it at 386. And then it went above 387 and hit this high. So by the time I got out of the trade, my options contract became in the money. And the reason I held up all the way because that was my target. I had no real reason to exit the trade because my idea was invalidated only if price action went below 386. And then I chose that point as to where I decided to exit because it was the most obvious point where sellers were positioned in the market and there's an adequate and clear amount of supply. That's it. You're just using all of those concepts and then in real time making decisions based off of that frame of thinking. And you can see that my thesis was correct and it was a good idea to exit at that point because price sold off and broke below 386. And then a good rule of thumb when choosing options is just make sure your expiration date makes sense based for the time frame that you want to take a trade for, and then choose a strike price based off of your analysis and your trade idea. And that's about it. These are all bare bone information that you need to effectively take a position in the stock market and profit from trading options. That's it, man. Like, now you know how to take trades. Now you know how you can be a profitable trader just by taking this course. And there's still obviously different implications and other little scenarios and things that you're going to have to learn. But you're going to be with me. I'm going to be with you every single moment and every single step in your journey because you're joining Jeems Trading University. You're joining JTU. Yes, you're going to have this course. You'll have access to so many other courses and higher level content and, more difficult concepts and information that's just going to improve you as a trader even more. But just with this general course, this gives you everything that you need. And I'm going to go in depth with all of these concepts even more and have like individual different courses and lessons and so many different stuff that's going to make you just that much better and be able to learn and be profitable. Because it's my goal to make every single person that joins JTU a profitable trader. There's no reason why you join this shit and you're not profitable within 2-3 months, or you're not even profitable. My bad. Because there's so many different factors, but there's no reason why you won't improve as a trader and become closer to profitability or profitable working with me or studying under JTU. That's it. I got nothing else to say.